would be particularly unhappy and the team was not able to convince him that, you need to give these risk factors, then they would call me and I would go and I would meet him and I said, truly, I used to say this, sir, actually SEBI समझता है कि ये risk factors investor के protection के लिए हैं. Sir, actually equally ये आपकी protection के लिए. Because once you have disclosed, what is the implication? Nobody can claim that you have hidden a material fact which may have changed their investment decision. So in India we don't have class action suits. We don't have them. In the US this is so common. The number of listed companies that face class action suits for non-disclosure. It won't be long before public interest litigation in our country takes the form of class action suit. It won't be long. Now the question is, being transparent, whether in the IPO document or subsequently in terms of your filings with the regulator and with the exchanges, means that it protects you. It's like a vaccination for you. It's protection. Nobody can now say class action suit, public interest litigation, because you have been completely transparent in what you have said. So the beauty about transparency is it helps both people. It helps the company, it gives them protection, it helps the investor because now he's making an informed decision. And going forward with the way that artificial intelligence is evolving around the world, you can imagine the power of that engine, to be able to identify two things. One is to process what is disclosed and make it much easier for the investor to digest. And secondly, to actually identify that something has happened but you have not disclosed. That's where artificial intelligence is going to take us. So on this path forward, this transparency and disclosure as a building block of trust is critical not just for the benefit of the investor, but for the benefit of each of the listed companies and, of course, people like the mutual funds, etc., who also have a lot of disclosure requirements. Fortunately, as I said, all of this is being assisted by technology. So in SEBI, we are moving quite rapidly towards doing everything using technology. So many of you would have seen ease of compliance, for instance, automated disclosure, right? The depositories automatically disclose on your behalf many of the things which are required under our SAST regulation. You don't even need to do it now. There's no need. Why should we bother 5,000 people when one depository can do it in an automated way? Similarly, you would have seen automated blocking of accounts of key management personnel. Why run the risk of inadvertent insider trading? It's just blocked, right? So our whole move is that we want to make compliance as easy as possible for all 5,000 listed companies, and the only way that can happen is through use of technology. Similarly, having a RegTech solution. Now, referring to FICCI here, but FICCI has actually put together a RegTech solution. I was amazed that because of the aggregation of demand, the cost per company to use that RegTech solution is really very reasonable. And what FICCI has done is they've already configured that RegTech system for all of SEBI regulations. So any company can just plug and play and at a very, very cost-effective rate, and you're ready to roll and comply with everything in terms of SEBI regulation. So technology we see as the key to good governance and ease of compliance both at the same time. You can achieve both. There is no trade-off here. There's no need for a trade-off here. Similarly, data. The point was raised about data-based policy making, and this has now become core to SEBI. So we do not look at any proposal unless we see whether A, the problem that is being articulated that we are trying to fix, is it real or is it imaginary in our heads? What does the data say? Is there a real problem? The second is to backtest everything that we do. So anything that comes along, and we refer to, for instance, core ESG, core BRSR. The reason we are so confident that the Standards Forum is not going to have a problem in articulating and specifying the standards is because हमने तो backtesting कर ली. So we've actually worked at the time of formulation of the regulation itself. We have done backtesting and seen, is it going to be easy, is it going to be difficult? And the backtesting actually showed us, this was a study done by the Chartered Accountants Institute, that 95% of all the data that is required for assurance is either immediately available or reasonably available with the company itself. So 5% is what they came back and said we need to do some tweak because, you know, where are we going to get this data, etc., etc. But otherwise, it was really simple, the backtesting. So we believe a lot in data, and we are clear that this is very, very important for us in policy formulation, because otherwise we can go badly wrong in terms of our impact on the market. So if we do all of this, what is now the result of this? And this fine balance that we need to have between investor protection and development of the market and ease of doing business. This is an analysis of all the circulars that we've issued, 167 of them. Of course, 167 is across, you know, not everything pertains to listed companies. I think listed companies out of this is only 5 or 6. The rest is all, you know, exchanges, brokers, mutual funds, AIFs, everybody, PMS and so on. All together, if we take, the proportion of our circulars which are developmental and ease of doing business is almost equal to risk management and investor protection. So what the market sees as compliance is that 48%, and what the market sees as making life easier and allowing new things. So what do we mean by development? We define it in a very sharp way. Development, any circular is allowed to be put into the development bucket only if it facilitates a new product. So for the first time we are allowing, permitting, doing something for a new product, a new service, a new investor class, a new asset class, a new channel, something which up till now was banned, not permitted, etc., is now being facilitated. That's when we put it into the bucket of developmental. Ease of doing business is all the good stuff that, you know, okay, now you don't need to do this, now you don't need to do that, or you do this once in a year instead of twice a year, etc. So the balance that we strike in terms of this is now almost 50-50, as you can see. And our belief is that this number may vary from time to time, but the important thing is we are now measuring it, we are tracking it, and we are committed to it. So in some quarters, in some year, it may be 44, in some years it may be 50, in some years it may be 35. But our eye is on this balance, and we are committed to it. The other thing which has been spoken about the Industry Standards Forum, and I must say, because it's difficult for you to take credit for it, so I need to give you the credit for it, is that this is something that is so important and is working. The early days, it's still early days, the early days, the traction is so positive that SEBI has gone to its own board and stated that while we are running these as pilots right now, we believe that this has the potential to become a permanent, permanent unit of the regulatory architecture. So it is our desire to make this Industry Standards Forum a permanent feature of the way in which the regulator acts. And what that means is that the forum, of course in consultation with SEBI, comes up with a bunch of standards which are very specific, and for each listed company, once that checklist is there, and you say, I have done what I need to as per this standard, there is no ambiguity, there's no interpretation, there is no need for any legal opinion, you are deemed to be in compliance. So therefore, this will just make the whole process of compliance so much easier for everybody, because nobody is having to double guess what it is that you need to do, and including many of the independent directors who come and meet us, they are on, you know, large listed company boards, and they say, we worry whether the company is doing it right. And so it's so important that tomorrow if your audit committee says, what is the standard and are you in compliance with the standard, it's just so easy for you to stand up and say yes. So the standards will transform into deemed compliance, and that is why it is so important for us to have this forum And it's not only for listed companies. We've had a forum like this for the longest time, almost, I would say, more than 5-6 years in the mutual fund industry. It's worked beautifully. We now have one for brokers and for AIFs, etc., across our market participants. But this one, where all the three associations came together, and it was absolutely music to our ears. They are working together in such a collaborative fashion with one voice. I know it's hard at the back to build that consensus. That's not easy. So we really, really appreciate that this is, one of the important elements of regulatory architecture that we need to bring about, on a more permanent basis. This is just, a slide that I like to use because when we talk about technology and risk management, often people wonder whether, there's a lot of cost and so on. And I say, well, of course, people invest, MIIs invest maybe 50 crores, 70 crores. But what is the benefit? This is a per annum number of the technology-driven initiatives that are there. And as I said, the second line, ASBA for trading secondary market, which is the biggest contributor here, is going to deliver to investors 3,500 crores per annum of hard cash saving. This is not a model. This is not hypothetical. This is real money where the entire system will get the benefit of 3,500 crores on an annual basis on account of the technology initiatives that have been implemented in the capital market India stack. With all of this, if this trust has been built, is it surprising? And more importantly, the real economy, as I said, that's like you, right? That's not us, that's just you. With the strength of that real economy and everything that's been built in the markets, today if you see India's weight in the MSCI Emerging Market Index, which is one of the most widely followed indices globally for investment, India used to have a share which was 6.6%, today it is almost 16%. The BSE market cap, which was 74 lakh crores, is now 311 lakh crores in just a period of 10 years. If you look at the mutual fund AUM, asset under management, 8 lakh crores to 47 lakh crores, and I'm told I'm a little out of date here, we're probably closer to 50 lakh crores now. This is the kind of growth we are seeing. You look at the number of unique mutual fund investors. This is PAN level, so not folio level, PAN, these are unique. We now have over 4 crores of these investors who are really, contributing to this stability in the market, because even when foreign money goes out, it may be because of Fed tightening, etc., liquidity in the global markets, the resilience comes because our investors are really coming in either directly or through the mutual fund and through other domestic institutions. While the equity side has grown very beautifully, we at our end, because we want to talk about the future, what is it we believe about the future? And I borrowed this slide from Nandan Nilekani's presentation that he made recently, where he talks about how digital capital can transform physical infrastructure in the country. Now, this is today the example he's given is for NHAI, right? For funding roads. But this is equally true for every part of our economy in terms of every element of infrastructure. It can be ports, it can be airports, it can be power, it can be roads, everything that you can think of. Our belief is, and this belief comes from a very simplistic thought, if you think of all the economic activity that happens because of the 5,000 listed companies, and you say that that is worth 300 lakh crores, we just saw that number, the market cap. Imagine the value of all the infrastructure that is there in the country and is going to be there in the country. And if all of that were to be measured through REITs and InvITs, which is one of our most, I would say, important instruments today that we are trying to grow, it can be a whole additional 300 lakh crores. Imagine in our country we can double the equivalent of market cap, double it, by simply taking what is now a highly digital capital-based infrastructure in our country, which is becoming more and more so, and transposing it into the REIT InvIT structure, and you can have REITs and InvITs which tomorrow can potentially be valued equally at 300 lakh crores. That's our sense of where India can go. Maybe it will take 15 years, 20 years. But that's the potential that we keep talking about and how it will manifest. And therefore, we have a lot of emphasis in SEBI on REITs and InvITs. And of course, as you know, in our country, REITs and InvITs are interlinked because the viability of infrastructure projects comes from the value that is created in the real estate when that infrastructure comes up. So when you build a road, the real estate around the road gets value, and therefore the two are linked. So that's the value that we see. And we think that this is the opportunity for all of us sitting here to double effectively the market cap of the country. Where are we on that today? So if we look at today, market-led capital, okay, what is it that is being raised capital from the banking system versus from the market? So if we include corporate bonds, REITs and InvITs, and we compare that to the outstanding bank credit to industry and services, today we are at about 66%. So almost 2/3 of what the banking system gives to the economy in terms of debt, 2/3 of that is actually coming from the marketplace in one form or another. And to end, where do we think this is going to go? What we're delighted with is, on a lighter vein, thanks to the immense efforts of the government and the Reserve Bank of India, the Indian sovereign bonds are now going to be part of the global indices. This is hugely important for us as a country, not only because it will help in the government raising resources, but once the Indian yield curve is established globally, on the back of that, the corporate bond market can also get a lot of traction and a lot of interest from foreign investors. And so we are hoping that down the line, it will be a case of, my name is Bond, Indian bonds. Thank you.
Thank you very much, Mrs. Buch, for that one.